Hi, welcome to this video deca, which is all about a simple and easy Forex trading strategy that anyone can learn. Anyone can learn this strategy quickly, and basically it will really get the odds on your side in terms of catching really big moves in the markets. Now, the strategy is very simple to understand in terms of how and why it works and why it will never go out of date. Now, the strategy itself is based upon trading with smart money against speculators. Now, I'll explain the strategy as I go through the video, and I'm actually going to use a pair to illustrate the method, which is going to be USD MXN. We'll go to the chart in a moment. Now, in terms of the strategy, all we're going to do is use simple technical analysis, and we're going to back up our technicals with a tool which is called the COT Net Traders Positions. Now, the COT Net Traders Positions will tell you exactly what smart money is doing in the markets. And when that smart money diverges heavily in terms of their positions from speculators, you will look to trade with the smart money. And this method of trading generates you really high odds trading signals, okay? And you can lock in and hold really big trends. Now, in terms of looking for big trends in the markets, if you catch big trends, you do not need to get many of your trades right to make money over the longer term. And this strategy, we're normally going for risk to reward trades of 5 to 1 or more. So you can actually lose 4 of your trades and still break even. Now, in terms of this strategy, we're going to go and look at how it works. Now, just before we do, just please keep in mind when I'm giving my view of the charts, it is my view as of right now. It can, of course, change in line with the market conditions. If you want all our trading techniques, our daily technical and COT analysis of 14 major Forex pairs, you can click on the link beneath this video and get live access to our member center. Right, we're going to go and take a look at the trade setup and look at the COT Net Traders positions first. Right, just quickly looking at the COT Net Traders positions before we go and draw levels of entry, stop and target on another chart. Now, in terms of the COT, the data is always foreign currency first, i.e. MXN USD. We of course trade USD MXN. I'll just reverse the chart the right way around in a moment when we draw our levels, but here we're just looking to see what the smart money, the commercials in red, are doing against the large speculators. Now, in terms of another group on this chart, small speculators, we're not interested in them. We only want to see what the big money is doing against each other. Now, in terms of on this chart, I've got 3 divergences highlighted. Here, big speculative long position opposed by big commercial short position. You can see what happens. That is a really big move to the downside. This is a fast moving volatile pair. Now, in terms of here, it's not such a big divergence. They diverge out against each other, tops out, has another rally, and then a nice fall to the downside, okay? In terms of C, if you look at the size of the divergence, it's the biggest by far. And what you get effectively is the topping out here, down, and a little bit of a rally back. It's a bit like we saw in B. But this divergence is so big, it's the biggest in 3 years, that it points to a sizable move to the downside. So we could easily get down to the level that was reached on the A divergence, okay? So it's a really good opportunity in my view, and we have seen the peso rally a bit, but the divergence between the two groups points to that rally failing. So basically what this data is telling us is the USD should go up on the Mexican peso, and it should be, in our view, a really good move. Now what we'll do, is go to the chart, get it the right way around and draw some levels of entry, stop and target. Right, we're on the USD MXN and we have the chart the right way around now, so I'll draw my levels in just a moment. Now, in terms of, just before we do, I'm just going to look into why the commercials are so bullish of the USD. You can, of course, just go with the commercials, as I've said in many videos, but we like to know why they're bullish because it gives us more confidence in the trade. So I'll just go through the reasons. Central Bank of Mexico will cut interest rates soon as rates are just too high, which is impacting on growth. And you can see growth slowing in the business PMIs below forecast, GDP is slowing. The bank are getting ready to cut interest rates, and they've indicated this. And the interest rate is very high in Mexico. And that's the only reason speculators are short the USD. If you short the USD and long the MXN, you get the differential between the two rates. It's very good, okay? Now, we know also that the Mexican peso is the best performing currency globally against the USD since December, so it's very overbought as well. Commercials have seen this. They've gone heavily long the USD, and the speculators are, of course, heavily short. Now, in terms of this pair, I think we're getting ready for a really big move to the upside. We've already seen some upside, and obviously we came back a bit last week. Now, in terms of this pair, done videos on YouTube on it. We actually have done a trade completed long the USD, and we did it because we saw the big divergence when prices fell down here. This big red here outside of an outer Bollinger Band. We very often like to buy back within the outer band, which we do on this blue candle here. The tail doesn't get through that tail, so no more sellers. So we're going long, and basically we do move up, and that's the level I'm drawing here, which we came through. Okay, so we've got a really nice entry, and we did go nicely higher, and we thought we would carry on to the upside. So we took half the trade off here, looking to put it back in above these two candles. Left half open, and we slumped back below this 20-day moving average where we put our stop behind. Got taken out. But this is a fast moving pair. That was a really good profit overall. Now, we did re-enter literally almost straight away on the next day. This blue candle tail here, as it came back up, we thought we wouldn't see more selling to the downside, so it came in through the close of the red. We've slumped a bit back from our entry, so a bit underwater at the moment. But I don't see much downside. Now, in terms of if you wanted to get into this pair, where would you get in? Well, I think this is good support now. Basically, where we break up on the big blue, the red and the blue here find support, we push off. I think we push off the level again if we reach it. Now, in terms of coming in long, you don't want to just basically come in when the market is going down. You want some strength, okay? My own view is the level to come in through. I'm just going to draw a trajectory in. See if I can get my line straight. There we go. The 20-day moving average, we always like to see that taken out if we're bullish. And basically got three candle bodies all in line above the 20-day moving average. So straight through that level, okay? Now, in terms of this pair, I think we're going to get a really big move to the upside, okay? However, you do have these two candles in the way here, okay? What you can do is go long and then see how price performs up into the level, okay? Like we did here, just wouldn't reach the level, so we took half off. Just to see how quickly price moves the upside if it does. Then you've got the option, always do two trades and take one half off and then bring your stop up on the other half, okay? But comes up, see how she does. But my feeling is these candles will get taken out. The speculators will just exit en masse, okay? And that is going to give a really big move to the upside in our view. And we saw the divergence on A, and it wasn't as big a divergence as we've got now. Makes that level a realistic target, okay? Now, if you look at this trade, it's got a really good risk to reward on it. You're only risking between here and you want to stop a little bit back from here, say 18.95, and then you've got all that reward in your favor against your risk. So it's about, I think it's over 6 to 1, isn't it? So that is the opportunity. And I think in terms of the COT, when you say it's an easy, simple strategy, it is. It makes your technicals much easier. You know what the big money is doing behind the chart, and you can actually make these really ambitious profit objectives, which you just cannot do from technicals alone. So I think, as a COT trader with simple technicals, you don't actually have to win a lot of trades, as I said earlier, because your risk against your reward is always so good. I think it's a great way to trade the markets. We've traded with the COT now for nearly 30 years, and it always gives you fantastic risk to reward entries. So we'll see how this pair goes, but the strategy, simple. You can have confidence in it because it's never going to go out of date. The commercials diverging against the speculators always gives you great risk to reward opportunities. Right, that is the video for today. Thank you very much for watching me as usual. Take care. Have a good day.